you need to be updated. In most cases, you need to stay updated. You need to also look at your demands, and or rather your supplies and demands. You need to know those things. So you're gonna have to look at the graph. It's basically taking you back into trading. What's up, guys, and welcome back to 2023 first video for the year, and happy new year's to you all. Welcome back to the channel. Please do subscribe, press that notification button, and make sure that you stay up to date. Okay, so today's topic, guys, I'm going to be talking to you about investing. I'm going to define it, what investments are, what are the types of investments you can get into, how to make money using in those types of investments, and what are the advantages and the disadvantages. So stay tuned, there's a lot to learn, and I hope you guys enjoy the video. So without wasting any more time, let's jump into it. Great, so our number one is, what is investing? Right, so I'm gonna read it straight from my computer, and I think this is the most easiest explanation of what investment is. All right, so it says to put money into financial schemes, shares, properties, or any commercial ventures, right, with the expectation of achieving a profit. So in simple terms, putting your money into something with the objective of receiving a profit. That's basically what investment is. So just to throw in some examples as well, right? So I have a 5,000 rand for an example, and I happen to buy shares. For an example, I buy shares, right? So if I buy shares for a company, so my plan with that 5,000 bucks is to make a profit out of it, right? So I'm hoping that the shares are going to give me a profit in the long run, and that's basically what investing is in simple terms. Okay, so that's what investing is. Now let's have a look at on the types of investments you can get into. All right, let's go. So looking at the types of investments that you can find yourself into, so there's plenty of different types of investments, right? Such as you can invest in bonds, government bonds, right? Stocks. You can invest in real estate. I mean, it all depends on the type of capital that you have, right? So the main point of my video, obviously, I'm looking at someone that doesn't have enough capital to invest in such things as real estate. You know, that it's gonna mostly need a large lump sum to invest in those, right? So I'm looking at buying bonds, buying shares. I mean, something as little as 200 bucks. It costs you that much to get yourself invested in. So I'm mainly gonna focus on buying shares, equity. All right, so equity. So the platform, I'm not going to discuss that on this video. However, the platforms that you can get yourself into, they actually do allow you to invest in real estate as well. So you actually just buying shares within that real estate company. Okay, so I'm gonna look at shares because this is the field that I can say I have more knowledge compared to all the other fields. So I have more to share with you guys on this field. All right, so we're gonna look at shares, guys. Okay, so you can get into buying shares. So what would it mean by buying a share? All right, so I'm gonna give you an example. So let's say Toyota, for an example, right? So Toyota is listed and the platform that you're using, they have the rights of selling you shares or becoming a broker So a broker is like a middleman, right? So they becoming a broker that actually assists you buying shares at Toyota, the company Toyota, right? So it's as easy as you buying shares, depending on the amount that you have and how much the share price cost, right? So I'm gonna give you like a practical example, in not too deep, but just light information, just to give you an idea, right? So if you are buying shares, and let's say Toyota shares is 1 rand per share, for 10 rand per share, for an example, right? So it's 10 rand for one share. That's what that means. 10 rand per share, 10 rand for one share, right? You would like to buy shares worth $100. So that means you are buying 10 shares, okay, at 10 rand per share, which is going to cost you $100. And so now, platform will allow you to actually do that, right? So the main objective here, if I am buying it at 10 rand per share, then I'm hoping that this share price is going to at least go to 11 rand per share. Then I'll know I'll be making 1 rand profit per share, or 12 rand, or 13 rand, it doesn't matter, but it needs to go up, right? Then I'll be making money off those shares, okay? So it's like trading. You're basically trading the share price. That's one way of looking at it, right? So there's different types of ways to invest. I'm just giving you one scenario. The second scenario is that you can choose whether to invest, right? And in this investment, you are looking at dividend received. Okay, so you're looking at a company that's going to be paying dividends. So most companies pay dividends like a minimum of once a year. Okay, looking at obviously how well they did. There's a lot of factors why a company would actually pay dividends, right? Okay, so they can also choose not to pay dividends and focus into the growth and invest that money elsewhere. Okay, so a company would normally declare whether they're paying dividends or not, and should they declare that they're paying dividends, they will also declare how much they are going to pay. Okay, so that you can know, and when the closing date for you for these purchases would be, as well as the last trading day that you can actually buy these shares in order to get the dividend. Okay, so companies do actually declare such information. So it is totally up to you on how you want to get into your investments, how you want to grow your portfolio, and how are you actually, what is the objective? Are you looking at trading the share price, or are you looking at just receiving the dividend? Okay, so there's two ways to make it. Okay, so how to make money with investments. Okay, so I've already basically touched on the two types of ways you can make money. So the first one, just to recap, it's you either buying shares, right, and you are looking at the share price to improve, right? So when you are buying shares, right, and you are trading, you're basically investing in the share price. So you are hoping, number one, that the business is doing good, right? And when it's doing good to a point that its share price is increasing. Okay, because that's exactly what you want. So you are looking at a long term, looking at the same example. If you're buying shares for 10 rand per share with the value of $100, so you have 10 shares that are worth 10 rand, right, each. So now, if you are looking into making a profit, I mean, if you're looking into making just 100% profit, so doubling your account, right? You have 100 rand invested, and you want to see your account at $200. So you need to wait for the share price to hit 20 rand per share. So you need to know the factors that affect the share price. Okay, you need to know things that will increase the share price, the decisions that they're making, the speeches that they're making, the change in the company that they are planning to, you need to be updated. In most cases, you need to stay updated. You need to also look at your demands or rather your supplies and demands. You need to know those things. So you're gonna have to look at the graph. It's basically taking you back into trading. You need to analyze your charts. You need to see at what price are most people investing in these shares, like at what price are the shares in demand, so that at that specific price, that's when you would buy your shares. You need to know when to buy your shares. Obviously, the main objective is to buy low and sell high. You're looking into making a profit, right? So trading the share price requires you to do more research, right? At share price, you are trading the graph, okay? So you are trading the graph, and you are looking at the price to increase, so the company to actually do good to a point that its shares are worth more than they were in the previous years. That's what you're looking at. The second point is trading for dividends. All right, it's buying shares for dividends. Sorry. So I prefer that one because it's less research, right? And there is basically a shorter period of time for receiving your payout, right? So company, for an example, it can say that, okay, so we are issuing our dividend on the 31st of Jan, right? The last trading day would be the 25th. So from the 25th, any shares that are being bought are not counted in our books as shares or shareholders that we need to pay. So the last day for you to be considered as a shareholder so that they can actually pay you on the 31st would be on the 25th. So you need to make sure that you know that information. All right, so there are platforms that you can subscribe into, and they can keep you updated with that information, right? And you need to know exactly when to buy those shares so that you can actually qualify for the dividend, right? So it's much easier like that, because a company would say, okay, fine, we are paying R2 per share, right? And if you have 1,000 shares, for an example, then they would pay you R2 per share. So they would say 1,000 times R2. So you'll get 2,000 rand, and that's your dividend. You still keep your original amount that you invested in, right? And you would still have shares. So they're not buying or paying off your shares. They're just paying you for being a shareholder. So let's get into the advantages of investing in shares, and then later on we'll do the disadvantages. Okay, so what are the advantages of investing? And well, the first and obvious one is you actually generate a profit, right? So unlike saving your money in the bank, okay, so the bank might decide to give you 6% annual interest. So if you have 1,000 rand, that's literally like 6% of that. It's like $60 per year, if I'm not mistaken, right? So you only get 6% of the amount you invested in a year. Okay, not even every month, in a year. Okay, so when it comes to investing, you definitely make more than you would saving your money in the bank. That's like the first and obvious one, right? The second one is that investing is actually long term, right? And in most cases, stocks actually do increase their value over time. I mean, every company wants to do well. So chances is that the stock will increase over years, right? And as it's increasing over years, you are making more profit on the share price, right? And at the same time, you are making money every year with the dividends that you're receiving. Okay, so that's like double profit. You know, that's what investing is. So it's actually good money. Okay, one of the other advantages as well is there's less commitment, right? So it's less work that you would need to do rather than when you are trading things that are short term, because now you're looking at a long run, so it's long term, right? You don't need to keep checking, like I said, you don't need to keep checking your investment on a daily basis, because chances is that it won't be that much affected. There won't be that much of a difference on a daily basis. You know, you're always looking at the long term, so you're always looking 5 years from now, 4 years from now, 10 years from now, and hoping that at that time you have made a huge profit. Okay, that's your aim. That's your aim over years. What are the disadvantages? We've covered the advantages of investing. Now let's look at what are the disadvantages of investing. Okay, so the first disadvantage is that there's actual potential loss. Okay, so you can lose your money when you're investing. I mean, it goes back to the more risk, the more reward, right? So if you have zero risk, then the reward is going to be so little, and you basically have nothing to complain about because you're not risking anything, right? Which takes you back to putting your money in your savings account, right? You've got little return, but you can't complain about that because you have no chances of losing that money. Should the company become bankrupt, or should it start performing bad, the share price would drop, and that will result in you losing that money or the capital that you've invested. All right, so that's the first and most obvious reason, disadvantage that you might come across in investing. Okay, so the second one would be the time, right? It would require you to be very, very patient because investing is long term. Okay, so in that case, obviously it will take long. It will take very long for you to make an income. This is only obviously when you are investing into the share price itself. Okay, now that you know what investment is and investing is, you know the how to make money off them, you know the advantages and the disadvantages of them. So now the tip for the day, I'm gonna tell you how I make money using investment. You need to create what we call a portfolio, right? So when you're buying shares, you don't just, if you have 5,000 bucks that you're willing to invest, right? You're not going to get into one company and buy 5,000 worth of shares. Okay, so what you're going to do is maybe out of that 5,000 bucks, you might want to choose maybe 5 companies, right? And with those 5 companies, you would want to buy 1,000 each. So spend 1,000 each on each company. Okay, so what I do, if I have 5,000 bucks, I would use 3,000 to buy shares, which is I'll choose my best 3 companies. They must definitely pay dividends, right? And they must have a low, or rather the price must be at a demand. Okay, so I know from then chances of the price decreasing would be less likely. All right, so I need to buy at the demand zone, right? And then I would buy shares, so 1,000 each on these 3 companies. That's already a portfolio. Okay, and then with this 2,000 bucks, right? So I would subscribe on a platform that would tell me the types of companies that are paying dividend on each month. All right, so it will send me a list of all the companies that are paying dividends, all the last dates that I the last trading date. Okay, And then what I would do is I would buy shares on those companies for whatever amount. So I would calculate first how much I would receive, right? Looking at the how much the company will be paying dividend per share, and then I would do my own calculation to see how much I would receive with the remaining 2,000 rand that I have. So I would say if I buy 2,000 worth of shares in this company, and how many shares will I get, and how much will I make when they pay the dividends? All right, so it needs to be worth it. If I'm spending 2,000 rand, I'm looking at least 500 bucks. If I'm going to get paid 500 bucks for the shares that are worth 2,000 bucks, then why not? I would definitely buy that, right? So what I would do is I would buy those shares, right, until the date. So I'm not looking at long term. This is a short-term investment, right? So I would buy those shares and until the dividend is paid, right? So the moment the dividend is paid, then I would sell the shares, but I will make sure that I do not make a loss. Now there's another trick on this one, is that in most cases, right, if the dividend is let me say a big amount, right, the share price would drop immediately after the dividend has been paid. So the share price would drop by the same amount of the dividends that's been paid. So if the company is paying 2 rand per share, then the share price will drop by 2 rand, basically meaning that you have not made any profit. So there's two ways to do it, right? You need to identify when the share price, when the date for actually purchasing the dividend closes, and when the payments are or will have been processed. So meaning if you sell your shares after the processed date, then you will most likely still get the dividend while you do not own the shares. So you're now missing the date whereby the share price will drop. You've already sold your shares by that time. So that is the buy and sell. All right. So do more research on that. Come back to me and tell me what you think. Please do comment. Tell me what you think about the video. Don't forget to subscribe as well. And happy investing.